gentlemen, and welcome out to your RBA announcement, April 4th, 2023. Maverick currencies, we're going to go through a few different concepts as far as the RBA is concerned. And let's first kind of take a step back and say, where is the RBA coming from? Expectations are for no rate hike. They're at 3.6%, expected to remain at 3.6%. Part of that, I think, is the change that we're seeing in really global central banks around the world. The tightening cycle is expected to be coming to an end in the US. I don't know if that's actually true or not, but that's kind of the expectation, is that we're in the late innings of these hikes. Now, in Australia, in New Zealand, you can see the RBNZ. So New Zealand is expected to raise rates by 25 basis points and go to 5%. The RBA is well behind that. But this is one of those meetings where some of the things that have come through the pipes, like, for example, the most recent CPI number, the inflationary number out of Australia, was lighter than was feared and expected, and that probably gives them cover. There is a little bit of debate as to whether there will be more hikes and when they're coming, and whether this is just a pause intermittently and then they hike once more or so. But the markets have kind of moved into this mode where we're in a little bit less of a tightening cycle, or nearing the end is how the markets are pricing that in. And if you look at the Fed has been essentially money printing of late. If you look at what they've done, I think it topped out, I want to say it was like 8.97 trillion was the Fed's balance sheet. It took them a year of quantitative tightening to get that down to about 8.3. In the last 2 weeks, when the bank crisis hit, they took it all the way back up to 8.7. Basically, they undid 2/3 of the tightening that they had worked on for the prior year, and they took that and basically printed money and essentially undid all of that work, that specific work, in the matter of a couple of weeks. Now, one can look at that and say, well, okay, but the interest rate hikes have happened. That takes time to come through the economy and so on to see those effects. And that's true. And so all of these central banks are kind of operating on that same mode of maybe we're not done yet. Now, if we come into the Australian dollar versus the US dollar, this one's interesting to me because I could see yesterday being a bit of an exhaustion high. You can see on this daily chart, if we zoom in a little bit, you can see the setup as well. So if I come in, if I come in tighter, notice that we're at the upper Bollinger Band, but below a declining 50-period moving average. So it has a bearish, overbought, but still in a downtrend type of signal. We've got a little bit of an exhaustion signal yesterday, and at minimum, there's usually some price overlap. So maybe, excuse me, maybe the price overlap brings us down to 67.50, even if it's not the top and not the reversal. Now, the daily chart sets up for a give back, a couple of days selling. The problem with shorting Aussie USD on this is, as we look at the other time periods, the 4-hour is still pretty bullish. The 1 hour still pretty bullish. We've got to come into a shorter time frame before you can find the setup. Now, the 15-minute chart is right there at the bearish signal in the very, very short term. And now we're talking about a quick trade, a 15-minute chart trade. Notice we broke below the moving averages. We're now retesting from underneath. This is exactly where it should fail, and basically will probably be the catalyst, will probably be the actual announcement from the RBA. My focus is more on this playing to the downside, so expecting that maybe we're going to see some selling pressure. And this is where I'm more focused, is we've talked a little bit, we talked the past couple of weeks about how a lot of what's been transpiring in the markets leads us to believe that stocks were going to go higher. Last week, I talked about this, that stocks look like they were going to surge higher. That's happened. When that happens, you should see money rotate out of the defensive areas like gold, like crypto. Now, both of those have basically gone flat, like US dollar, which has gone down. That's why Aussie USD is up at the upper Bollinger Band, right? Aussie's been much stronger than the US dollar over the past week, 2 weeks. So we expected more of a risk-on environment. The Aussie would go up, US dollar would go down. Money rotating out of these defensive areas. Now I find myself in not necessarily expecting that to reverse, but expecting a mean reversion. Saying, okay, if I look at this long-term chart on Aussie USD, again, would I rather buy or short here? For a trade, I'd rather short it. It's got a short setup on the daily and an exhaustion signal yesterday that kind of should act as an exclamation point. The way an exhaustion works is basically when you've been going in a certain direction and then there's the big surge, this theoretically could be a breakout. The reason I don't believe it's a breakout is you're coming right into all of this overhead supply, all of these dead bodies, right? This overhead resistance. So the likelihood that this is just going to break and just go violently higher is much lower than if it was breaking out back here. Now, if it breaks out back here, you don't have any overhead resistance. That's why it can surge for a few days. Here, I think it's more of an exhaustion, basically, that this is the final push of this recent rally and that we should have some give back. I don't know how much, but a couple of days give back is what I'm betting on. That's why I'm focused on this on the short side. So I'll be trading off of the 15-minute chart here if we get the setup. And the idea here would be to sell it short. So let's do an example trade. I'll just snap something in place. And I personally will not be trading on this screen, but let's just throw some stuff in here. I'll get us short ready and we'll put in a bracket as well. Whoops, that didn't take. So let's do 300K, 3-lot position, whatever. And theoretically, we would be shorting, whoops, changing the wrong one. We'd be shorting in here. We would be stop loss up above. Let's just throw it 10 pips above to start. We'll change that in a second. And then target, let's just go 20 pips or whatever. Now, the reason I like to have these in place, let me zoom in so you can see it here, because it might be kind of hard to see from that far away. But basically, I would have a sell order here that I can just quickly transmit. I like to have a stop loss, and I'd put my stop right up here above these peaks. So a good stop loss for me is at about 67.94. We're talking about shorting it somewhere in the neighborhood of 67, and I'd probably even knock that down just a couple of pips because I'd want it to execute rapidly. Basically, it will execute if I transmit the order. So if I hit transmit, that will execute as long as it's above 67.80. Now, if the market goes too fast to the downside, that order won't execute, right? I would need it to kind of bounce back up to fill that order, because I'm saying I want to short, but only if I can do it at 67.80 or higher. Right now it's above it. I'm not transmitting though because I want the announcement to come out. If I see it start to surge, I can quickly get an order live. I already have it preset and ready to go. Now targets, your target here, we might need to back out a bit to see a reasonable target, if you even want to set a target. But realistically, Again, I was talking about 67.50 or so, and that was from the daily chart, just saying even if we just have normal price overlap, it should carry us down towards about 67.50. So that's sort of a minimum type of target. Now, just off the numbers we have here, your reward potential is about 30 pips. Your risk potential is about 12 pips. So you've got a better than 2-to-1 reward to risk ratio, just the way it's currently structured. We very well may get short at a better price than 67.80. We might get short at 67.81, 67.82. Our stop loss, our target are subject to change, but this would be a good starting point, I think, for a stop loss up there above those highs. So again, if we zoom in and look at the full scope here, I don't love where that stop is. I thought I'd pushed it up above those highs. Looks like it came down just a touch. I'm going to go 67.94. So you'd be risking about 14 pips, reward of about 30. You're just over 2-to-1 reward to risk. So you're still better than 2-to-1 reward to risk, but I'd want that stop loss just above those peaks. That makes sense to me. And we'll kind of look at this for an opportunity. What I'm watching for initially will be a momentum surge. So whenever I look at something of an announcement like this, it's less about what they actually say and much more about how the market reacts. So the first thing, better term might be energy. I want to see an energetic move. If it spikes sharply higher, well, that's energy to the upside. At that point, I'm not trading it. If it surges lower, what you might find is this spikes down here really quick, and that's where we can basically transmit, and then all it does is just a little spike up there to fill your order. So it might happen quickly. And this is why I always say when I'm trading an event like this, I like to have some orders in place. You might see this surge down and then just chop around, and I got to hit that transmit button to catch it on just that little choppy jump back. It might happen for, it might be 10 seconds. It might last 3 seconds. I don't know. It'll happen quickly, but you've got to have that order ready. So again, this is an educational example, but is basically how I'm looking at trading this, how I would have my orders set up here. I'm working off of another screen here for a bit, but I would have that ready to rock and roll. All right, so we're coming into the announcement. We're roughly, just a little less than 1 minute away. And let's see what happens here. So, yes, short Aussie USD is a bit of the opposite of what I had been playing previously. I liked risk on over the past week. For tonight, I like a little more risk off. I like Aussie down, USD up for a trade. And it's a bit of mean reversion. It's based on technicals, right? We've got a bearish Bollinger Band set up on the daily and such. And we'll see if we can take a profit on this trade. So you just saw the announcement and see how it surged. Now, this is where you'd basically hit the transmit right there. Now watch it. I'm going to kind of bounce back. So it just went up to that. If you transmitted the order, it's possible you're already filled here. I didn't, but let's see. All it would need, and I would actually knock that down 2 pips. I would say just put it down there. Okay, it just went up. So everyone's filled now, regardless of whether you knocked it down a couple of pips or not. That means everything's live. We got filled on the short. Now the stop and the target would be live. Now again, I didn't transmit these. These were for educational purposes. If we hit this line, we're stopped out, and it may happen. We got a big energy spike down. You saw the chop back up. If it has follow through this way, well, we expect to lose money, or we were wrong about the trade in the short term. If we lose, it's about 14 pips. Not the end of the world, but that's our risk as it currently lies. Right now we're at break even in the trade. And let's see if this thing can work its way lower. If we can work our way lower here, then we can get towards that downside target. And just looking at this in terms of, could even throw lines on here to make it less confusing. Let me grab that and throw it in there. And we can move this one up here and put that line essentially on those. Now we can nuke that so that they're not showing up, but we still got the lines there that you can see where our stop out point is right up here and where our target is, which is down below. You can't see it because it doesn't show 67.50. Let me say this: the more it hangs right here, the worse the probability for our trade. So we need to start making some ground this way. I've traded these enough to know if you hang right here, you're probably going to hit the stop loss right up there. Or you could take off half. You could say, let's at least play it half as big. Take off half here at break even, let the other half ride. Anything like that, but I just don't like the price action in that we saw the surge down. The quick recovery, that's normal. That's like on a Fed meeting. You'll see that all the time. It's like the initial knee-jerk reaction fades away, but then you need to see this, and it's finally starting to happen, is, well, it's starting to make some progress that way. Again, I don't know how strong it's going to be. The more it stays up here, the worse basically the trade, the probability becomes. So it should start to do this, and it's starting to progress in that fashion. Let's come back over to maybe the daily chart and just look at it on the daily mode. And again, all we're kind of playing is that normal price action give back where we would basically overlap some with this prior day's really bullish candlestick. A push down here to 67.50 is not much in the grand scheme of things, but a nice little risk to reward for a trade. I do have to say I like the price action now. So if, maybe we jumped the gun, we clearly thought that the price action wasn't progressing. It is now. So this would be a circumstance where if you left half on, you're happy you at least left half on because now it's starting to progress. Some traders just say, I'm not going to try to do anything with it. I'll just set it and forget it. I've got my stop loss there for a reason. And in this case, they would be best served by just leaving the trade alone, because already you could take the trade off. You could take off half here and you've made more than what you were risking. So it's really working now. This is another area where you could also, final point, maybe move your stop loss down to break even and keep the target on. Now you've taken your risk to zero, because even if it comes back and hits the stop loss, you haven't gained, you haven't lost. If it goes down to your target, you make your money. So you'd eliminate your risk if you move the stop loss down to break even, and that could also be considered at this point. So yeah, in terms of risk and reward and probability, I generally like to start a trade with a 2-to-1 reward to risk profile. So that's ideal. It doesn't always perfectly match 2-to-1. Sometimes it's 3-to-1 reward to risk. But I want to have more profit potential than risk. And I feel pretty confident that I can analyze setups, put myself in good spots to be profitable. And then if I have a bigger payoff than risk, I'm really in business. All right, we'll leave it there. Thanks everyone for joining us. So far, so good. Aussie USD certainly working towards the target. Never would have hit the stop loss. If you went a little less optimistic and bailed on half, I get it. And if you did, you're going to make a little less money. If you still have the entire position on, obviously you'd make a little bit more money. So different strokes for different folks. Thanks again, everyone, for being here. Have a great rest of your night, and we will see you next time. Goodbye, everyone.